It's time for On the Radar, when we ask investing professionals what they are looking at in today's markets. Dennis Mitchell from Starlight Capital is back with us. Obviously, investors can see a lot of volatility in the public markets, but on your radar is the private markets. Give us a sense on when you're talking about private markets, what are we talking about here?
Yeah, so we invest in private real estate investments, private infrastructure investments, private equity investments. And the reason we do so is because increasingly investment advisors across this country are looking for ways to get better returns with less volatility and invest in investments that are uncorrelated to public markets. And when you look at the volatility in the market that we've experienced since Trump won the election in November, it's no wonder. So one of the other benefits of private investments, I think we have a chart that we can put up that shows that historically private investments have delivered better long-term returns than public investments. And this doesn't even account for the much lower volatility you experience. So if you're looking at a Sharpe ratio, the efficiency of a portfolio, not only are you getting better returns, but you're getting better risk-adjusted returns. So, it's in a period of volatility like this, it's no wonder that investors are looking increasingly at private investments.
I would say over the course of the, call it 25 years that I've been covering Wall Street, we went from talking about the rise of a few well-known private equity firms like KKR to private bleeding into all parts of the markets. In other words, first of all, you got private equity companies that are actually public now, so you can invest in a private equity company. But this idea of the average investor being able to tap into the private markets, really, it feels like actually there's been a massive shift in the availability of those assets to the average investor. Would you agree?
Absolutely. We like to call it the democratization of private assets. And the reason is simple. Globally, institutions are over 20% private investments. If you look at retail, the average investor, they are sub 5%. So if you do the math, there's a $4 trillion global opportunity just to get to 10% allocation in retail investment portfolios. So that's why you've seen a number of large private asset firms start to launch solutions that are available to retail investments and investors.
Is it worth making the argument that private investors can be savvy investors as well? So they know what they want. So if you're only in the public market, you're going to get what's available in the public market per se, but you might not necessarily be able to get your hands on some of the valuable assets that are in the private markets if you're solely focusing on like what's trading daily in New York or Toronto?
Well, I think investors think that the publicly traded markets are the economy, and they're not. 90 or I believe it's 87% of companies in North America that generate more than 100 million of revenue are private. And the number of public companies has been shrinking for the last decade, whereas the number of private companies owned by private equity has been increasing dramatically. So if you do want to get exposure to the U.S. market, the Canadian market, you're going to have to get exposure to private investments.
But you don't have to go to some private equity firm, if you don't have like $1 million, $5 million, like just as an example. There's all sorts of ways to get into this, and you were saying part of your own portfolio you're allocating into private.
Absolutely. I'll toot my own horn a little bit.
Please do, yeah.
But we do offer private solutions in addition to mutual funds and ETFs. We offer private pools that give you exposure to real estate, infrastructure, and private equity. And we do so with a liquidity wrapper, because everybody always says the same thing about private investments. Well, I can't take the illiquidity, right? The gated sort of access. If I need my money tomorrow, I need to be able to get access to it. Well, really, if we look at an investor's total portfolio, if you get into a car accident, you've got a $5,000 repair bill. Nobody, puts their house on the market to cover that, right? You've got credit cards, you've got savings, you've got other sort of lending vehicles, or you've just got, payment plans that are offered. Similarly, if you need liquidity in your investment portfolio, you probably shouldn't go immediately to the large illiquid investments that you have in there.
Real quickly, we're almost out of time, but so yes, you can get that liquidity maybe more so than you could before. But if you are investing in something that's private, like what's a reasonable way of thinking about how long you should be willing to invest in those assets?
Oh, you shouldn't be investing in private assets unless you've got at least a 5-year time horizon. Okay. 10 is probably better.
Okay. Dennis, thank you very much. And we're going to keep talking about investments, including some of the publicly traded ones, with Dennis Mitchell as we continue after this break. Also, the cannabis company Organigram is making a name change. They've added global to their name to reflect their expansion around the world. We'll hear from the CEO about that plan. And speaking of Dennis Mitchell answering investing questions, we're going to get to our first call segment coming up.